Hello everyone, welcome back. Okay, I promised to make a video on Fibonacci expansion. Alright, I made a very simplified video on how to use Fibonacci. If you've not watched that video, I encourage you to go ahead and watch that video on how to make Fibonacci, or how to draw your Fibonacci on your chart, and of course how to utilize it. So I'm going to also drop another video on that after this one. Now today we'll be looking at how to use Fibonacci expansion. Like I said earlier, I love simplifying things because there's no need complicating a particular thing. Meanwhile, there's a simple way of doing it and still get a good result with it. Alright, so now Fibonacci expansion. Alright, remember the last video was on Fibonacci retracement, so this will be on Fibonacci expansion. Now, like I said the last time, this is where you pick your Fibonacci. See? That's where you pick your Fibonacci from. If you've not watched the last video on this, please do go ahead and search that on our YouTube channel. That's Simplicity of Fibonacci. That's the title of the video. Alright, so now Fibonacci expansion. The last time, just to make a review, in case you had any difficulty using that, the last time talking about the Fibonacci retracement, alright, we'll discuss that if you want to pick Fibonacci, you can pick it from here. For an uptrend like this, you can pick it from the low, that's from the lowest point here to the highest point. Alright, so this point is the highest point. From the lowest point to the highest point, this is where you can pick it from. Alright, so now what are you trying to get? You're trying to get areas of pullback. So you can see the market made this pullback, made this pullback, made this pullback to 50.0 before it continues up, made this pullback to 23.6 before it didn't make a higher high. It made this go to 50.0 again, made this one, held at 23.6 like that, held at 50.0 like that. You see that these levels are always holding like a greater trader support and resistance level. Alright, so basically that's how to use the Fibonacci retracement. Now for the expansion, what is the idea behind the expansion? Now for retracement, the idea is for retracement. For expansion, the idea is, let's give an instance. As a trader, you expect this market to hit above, right, from this point. Now, how do you know the Fibonacci level that can fall at this point to be able to know where to take your profit? Why going up? Now, in this case, you've analyzed the market, you have found a direction. Now, but you don't want to be too greedy, but say, let's say you don't want to say this market is coming here, and then you place a trade here and keep a take profit here. All right, you don't want to have that kind of, that kind of fat take profit from the entry price. So we say the market will come. I'm not analyzing this market now, please guys. Don't think I'm saying this is going to buy. Well, of course it's going to. For me, I think it's going to sell to this zone. Why? But I'm just giving an instance. Let's give it an instance. So now you take up a trade from here, right? And you say the market is coming to this high. All right, that you're likely to find this market on this high. Now, how do you know at points where you can be able to take profit while going up? And this is where the Fibonacci expansion comes in for me. Right? I don't know how other persons see it. Just only the simplicity of how I handle Fibonacci, and it works really well for me. Alright, so what do we do? Remember, for an uptrend, you draw from the low to the high. For a downtrend, you draw from the high to the low. Alright, for something like that. Now, you will want to know where. So this is the lowest point we are saying for this particular move. Remember that we want it to go like this. So this is the lowest point we're seeing, and this is the highest point that we can see. Lowest point and highest point we can see for this particular move. All right, so we're going to use our Fibonacci and play around this zone to be able to get our prices. Now, for this point, instead of having our Fibonacci drawn from here to here, if we draw from here to here, we're going to have Fibonacci fall like this, right? Let me give an instance. If you have it drawn from here to here, this will serve as a retracement, Fibonacci retracement, right? Okay, so what we're getting here is areas of pullbacks. Now, for us to get the one going above, for us to get the point at which we expect this Fibonacci to go, like, you know, something like this. How do we know points to be able to take profits? Now this is what we need to do. You take a Fibonacci level from this point, right? Take it from this high, that is from this high, to the lowest point, right? We can try to come to this one here. Now what did I do? I just drew it against this particular move here. So I have timed this to become a downtrend. So I can now take it from here to here. So I drew it against. So I'll do that again, don't worry. Don't let it confuse you. It's a very simple thing to do. Okay, I'll delete this. Now I want to know at what point is this market going to make a buy, and at what point should I take profit while it's making its way to the high. What should I do at this point? I'm going to take my Fibo, right? I take it from this my high. I can even start to take it to this lowest point here. Right? Now, what am I doing? I'm drawing it against the sell move. That's what I'm doing. I'm drawing it against this sell move. That's what I'm doing. So once I draw this, I'm going to probably expand this. Now, expanding it, what do I need to? What did I get in doing this? I just got my areas of take profit. So if I'm having this thing making its way to the high from this market price, I'm going to have my 38.2 as my take profit. If it pulls back, breaks it, I have my 50.0 as my take profit. You know, at this point now, pulls back, break it, I have this, I have that. At this point, I'm going to be having closer take profits. Now, from here to here, see, that's like 12 pips. I can make it like 20 pips, 50.0, right? I can make it like 20 pips. Then at 50.0, I expect the market to make me some kind of pullback, all right? And then I wait for the pullback to 38.2 of 23.6, and I take it off. So the key thing I'm trying to make out of all this is that having the Fibonacci drawn this way, you're going to have areas of pullback. So at this point, you're no longer going to be looking at the market. You're no longer going to be looking at the market running to this high. You now have zones at which you can take your profit, right? And closer zones. So because market is not going to make a straight line, right? Market doesn't move in a straight line. It's going to be pullbacks, just like you have here. Market pullback to 61.8, fell, pullback to 38.2, fell, is pulling back to 3.6. You understand? Just like you have there. So now at this point, this will also help you to know the areas you're expecting pullback, so that pullbacks in the market doesn't take you unaware. So while you're anticipating to buy this market, all right, you take your profit. If you want to take your profit here, you can want to manually take your profit on this trade. You can also want to leave the trade to run, but it only gives you an idea of possible pullback areas and possible take profit zones. Can only give you such ideas. So that way, you that is trading, you're not being taken unaware. So you're not seeing a pullback and it's looking very strange to you, and you're also not, you're also not being in a haste to leave a trade, because you already know that those areas of those Fibo levels are also the areas of pullback, even if it's also an area of take profit point for you that's buying. All right, so this is the way to be able to play around your Fibo while trying to take a profit. So for me, I call this the expansion thing that people try to break their head on how to draw and how to get it perfectly right. Now with this way of me drawing my own Fibo, I feel very comfortable and the market does what I want it to do. So it works really well for me, and I hope it works also well for you. Now looking at this one too, you see that the market has rallied down to this zone, making pullbacks in 3.6. Now if this keeps happening like 2 times, you expect the market to fall from there. As simple as that. That's the way to use Fibonacci. So now this time around, it's not giving you like a lot of issue trying to know at what point is the point of pullback, at what point am I supposed to take my stop loss. This also aids you in taking your stop loss. All right, this also aids you in taking your stop loss. Just like it aids you in taking your profit, and it also aids you in understanding the areas of pullback, so you don't take it unaware by the market. It also helps you to take your stop loss. For instance, you want this market to buy from here because you think it's rejecting the zone. You're going to have your stop loss. This is the previous low, am I correct? So to get a stop loss on this trade, you have to pull this zone down to this previous low, like getting it down to this zone. Now, do you know what it did for you? Instead of coming to this below this zone to take your stop loss like we taught as retail traders, and you think this market is going to make, this is also a previous low. 23.6 is also giving you nearest low. So having a peep of having the market making peep of 17 pips for stop loss. You see, now you have lesser stop loss. Meanwhile, if you are never using the Fibonacci, this would be the ideal place for stop loss. Below this low, you're having 46 pips. You see the ratio? That's very high. So with this tool, you're going to have a closer range of stop loss because these levels tend to be lows and highs, previous lows and previous highs. All right, so you're going to have your stop loss closer than it would have been if you're using just the previous low or the previous high. So that way you have a closer stop loss. Remember, the purpose of stop loss is to be able to stop your loss. All right, I know some traders don't like that idea, but again, it helps you if you know how to make it very protective. It's called protective stop loss, so you need to be protective about it. Right? If putting it here is going to mar your trade, then of course you're going to come down to put it somewhere here. That's my own little advice with experience. All right. So if having too much close stop loss is going to mar your trading, what I mean by that is if it's going to make you always leave the trade and the trade goes your direction, then you want to put the stop loss a bit farther from that, so that way you give the market breathing space to clear out. But if you don't like putting the stop loss, make sure you like hedging, right? So that you can protect your equity, which is the primary thing, right? No matter what we're doing here, the primary thing is to protect our equity, because you're not going to risk 100% of the funds you came to the market with just to make a particular money you've not saved, right? So that's funny. No, that's part of the reasons why you're teaching us this money. Or you're envisaging, I'm going to make $2,000. Ah, that's nice, congratulations. But again, remember, you came to the market with $1,000. So you're not going to shoot the arrow or push the buttons and all of a sudden you made $2,000. If you did that, congratulations. But do not try that often. Alright? It's going to blow your account. There's no prayer about it, there's no magic about it. If you do that often, if you at some point try that and it gives you profit, I advise you to leave the market for the next 1 week, come back fresh and play around it. Do not build so much confidence in doing that, because for me that's gambling, that's not trading. Right trading has to be consistent. Alright, so basically that's how to operate with Fibonacci, and I hope you enjoyed this video, and I'm also gonna drop more videos on this Fibonacci and the flexibility of it, and how I also use it in my different scenarios or in a different way the market shows me, the market plays out, and also how I use it to play around the market depending on what the market brings to my table. So I'm going to make more videos in that. So go ahead and subscribe. Once all those educative video comes out, as a trader, you're going to learn a lot from it. And if you're new here, of course, you're in the right platform. So go ahead. You can also visit our website to get details on how to join us in our academy, and then we'll unveil the whole thing to you, and you're sure you're going to make money with the information you're going to get. All right. Thank you all for watching this.